Hey YouTube, and welcome back to another stacking video with the Florida Stacker. And in today's video, we're going to focus on the 10-year government bond yields and how they have sort of an inverse relationship with the price of gold and silver, mainly gold. We're going to focus mostly on gold here today, okay? And also, before we get started, happy Tuesday, everybody. It's 11:01 a.m. here in Central Florida, and it's a chilly day, believe it or not. So if you have plans to come to the Central Florida area today, tomorrow, then maybe bring a jacket and skip the sunscreen because it's in the 50s. And I can tell you that my Florida native friends, they're not accustomed to this weather. They're all freaking out, but it's usually pretty short-lived. All right, so moving on to gold and silver and government bond yields. And there was an article that kind of spurred my interest in bringing this subject up. It was published by Forbes yesterday, and the article states that gold is starting to look like a buy. And I'm not going to get into the actual verbiage of the article, but kind of just give you the basics. And the basics here are that as Treasury yields decrease, the value of gold tends to also increase, right? And as Treasury yields increase, gold tends to decrease. That's that inverse relationship that I was talking about at the beginning of the video. So looking at the article, I saw there was a 6-month period that was between June and basically the 1st of December today, which compares the 10-year Treasury yield and the price of gold. And what we can see here by looking at the chart, and I'll try to get a link to this chart in the video description section once this video is posted so you can have a look yourself, is that when we saw the lowest yield in the 10-year Treasury bonds in August, when they were hovering right around 0.5%, okay? So locking your fiat currency up for 10 years and you're going to earn 0.5% in interest each year. Wow, that's crazy. That is also when gold happened to break that $2,000 threshold, okay? Now, looking at today, I see Treasury yields, all right, are around 0.85. So they come up 0.35 since August. And what have we seen during that time period with gold? There have been a couple of days where we saw some fairly sharp increases, right? But if you look at the overall trend from August to today, it's a fairly subtle downward cycle that was accelerated. It accelerated in late September, then stabilized through October and November. And then as we got to the end of November, we saw it really accelerate and gold started to sell off. So I think that's why the article stated today that gold is looking like a buy. And the reason that the article states that is because, I mean, let's just think about it. Would you rather buy gold knowing that over the long term gold is going to go up when gold is low? Or would you rather chase the hype and buy gold when gold is in one of its, short-term spikes? Overall, like I said, with the devaluing dollar, and the dollar continues to see pressure, and we'll talk about the dollar here in just a second, you're going to see, as that continued pressure on the dollar remains due to the crappy monetary policy of the predominant major economies here in the world, that the price of gold is just going to continue to rise, right? And we're also going to see as certain investments, right? Certain investments like the stock market and BTC and other things that are out there continue to show these massive gains, that there's also going to be a lot less interest in bonds and standard bond yields, right? People are going to be looking to capitalize on making money, right? On investing their money, their fiat currency from whatever nation they're from, and buying low, selling high, and bringing in a profit, okay? So that's going to continue to happen. I see a lot of pressure against bond yields right now. I don't think certificates of deposit or bonds are that favorable of an investment medium at this time, and haven't been for quite some time. I do believe that gold, even though you obviously don't receive any kind of yield or dividend when you purchase gold, does have a much brighter, no pun intended, brighter outlook than bonds. But I do want to let you know, my viewers, that in the short term, over the last 6 months, we've seen 10-year Treasury bond yields increasing up from 0.5 percentage point to 0.85%. And during that same time frame, we've seen gold come down about $300, okay? So there is an inverse relationship. So if you're one of these stackers out there who likes to save your fiat currency, maybe, $100 a paycheck, $100 a month, whatever your schedule is, and you're watching for that opportune time to pick up a 1 troy ounce gold coin, because let's just be real here. To most people in this world, purchasing a 1 troy ounce gold coin is a very large purchase. $2,000 is not a joke. When the average American only makes about, $55,000 a year, to spend $2,000 of that, to convert that over to gold, that just more or less sits there, right? It doesn't really provide any utility, direct utility. It does have utility, but its utility is that it stores value, okay? But if you're making 55 grand a year, you're really going to put about 4% of your total income into one coin. Most people in that particular situation would prefer to stack silver because, for instance, I mean, you're going to spend $1,900 for the coin here on the left, when you could spend right now about $250 and get this 10-ounce silver bar, which is absolutely gorgeous. And obviously it's 10 ounces, right? It weighs something, and silver has a lot of potential. It's very undervalued. There's still plenty of time for anyone out there to build weight in silver before silver makes its inevitable run north, right? Growing population, growing industrial demand, push an emphasis on green energy, which of course requires silver in the solar panels, which I do believe over the next 10, 20, 30 years that we're going to see increased technology improving the amount of energy that solar panels can store and provide. We're going to start to see a lot of this stuff come into play, right? So the future looks bright, very bright for silver. It also looks very bright for gold, but kind of for different reasons, for the same reasons, right? The whole monetary policy issue definitely is bullish for gold and silver, but the industrial application side of silver also makes it a very nice looking long-term asset to hold. And it's not too late. It's not too late to get into silver, okay? So if you're looking for a big move in gold, I don't think we're going to see any more big moves to the downside or the upside anytime soon. I think those are kind of over. I think we're going to go back into another choppy period, which is good for people like me who like to accumulate weekly, bi-weekly, monthly, because I can make a couple of more significant purchases, lower my dollar cost average, right? Okay, so those things are good for me. So now let's talk about the dollar. All right, and looking at the US dollar index right now, I see 91.47, okay? The DXY is at 91.47. It's down 0.40 or negative 0.43% on the day. So that is also bullish for gold, and probably why we're seeing some spot price movement. So let's go to spot price, and I see gold is now up. All right, it was in the 1700s yesterday, and I'm seeing it spot ask price right now of 1,821. That's a change of $33.90, and I'm seeing silver doing even better. It was in the $22 range yesterday. Looks like spot ask price right now is $23.85. So still down from the $25 we saw last week in silver. So yeah, if you didn't get your fix in gold and silver over Black Friday or on Cyber Monday, and you still see some maybe those Cyber Weekly deals, I think ST Bullion has some Cyber Weekly deals. I'll have to take a look at their website when this video is over to confirm that. But I think it's still a good time to buy. I think now is actually an okay time to buy. All right, we've seen spot price kind of level out. We're seeing that the 10-year Treasury yields are also kind of leveling out. They were rising, now they've kind of leveled out, and we're seeing more negative pressure on the dollar. So in my opinion, that's actually pretty bullish for gold and silver, and also explains, right? We've seen rising Treasury yields over the last couple of months. As well as some more optimism in the economy over the news of several successful vaccine trials. All right, I don't care if you're anti-everything. Like I've said in videos, the vaccine trials do actually influence the price of gold and silver on a daily basis. Now, will they influence over the long term? No, it's these short-term market gyrations, right, that are influenced by things like, hey, we have a vaccine. People might be able to go back to work, whether you believe in it or not, right? So want to make sure that everyone knows that I'm not here to paint some conspiracy theory about the government or to tell you that silver is going to run to $100 tomorrow and to mortgage your home and buy as much as you can. That's not going to happen. At this channel, we steady state accumulate because we want to build and maintain our wealth over time. We're not going to go into debt. We're not going to sell the farm. We're going to work hard. We're going to be responsible in our purchases, right? We're not going to go out and buy a home we can't afford and get that latest sports car every 2 years and, have all the latest everything, paying those Uber prices, right? To be super cool. That's not what we do here on this channel. What we do here on this channel is we think about our financial selves. We think about our financial futures. And in doing so, we're going to invest, we're going to save, and we're going to diversify into gold and silver and build our own physical, tangible savings account and become our own bank over time, so that in 5, 10, 15 years, when your son or daughter needs to go to college, when you got to put braces on your kid, when you want to buy something fun like a new boat or a vacation property, you don't have to go finance anything, all right? Because you'll be your own bank. All right, guys, thanks for tuning into this video. So the key takeaways here is, as bond yields rise, puts negative pressure on gold and silver. As the dollar rises, puts negative pressure on gold and silver. And what we're seeing today is stabilized bond yields and a declining dollar. Also, the market news on the vaccine, it fades quick, right? You hear about the vaccines, it has that immediate action on the price of assets, and then it fizzles out really quickly, right? It dies fast. So today is a positive day for gold and silver. Looks like a decent day to buy. Hopefully you can lock in a good deal. We'll see you on the next video. Take care, my friends.